Alright, what's up everyone? This is Scott here again with a brand new video to help you learn how to trade, invest, and master your finances so you can apply that knowledge in the real world and multiply your money. And as usual, given that today is Friday, I have my next episode here of my live option trading series where I show you all the trades and all the adjustments I made this past week. Now this week here was a bit shorter than usual because of the Thanksgiving holiday, and also today the market is closing early at 1 p.m. Eastern, so therefore you would typically expect on days like this, if you go to the SPY chart real quick here, you would expect there to be very light volume and pretty much nothing happening. But that is definitely not the case today. As you can see, SPY is down by a huge amount, over $9 at the current moment, which is about a 2% decline. And then also if we go to the IWM ETF, this is the Russell 2000, this one's down even more, almost 4% today. And then finally, if we go to the VIX futures chart /VX, this shows you the implied volatility for the S&P 500. Take a look at what's been happening this morning. The VIX is up by over 17% right now. And it seems the reason why all this fear is being introduced into the market right now is because there has been a new coronavirus strain discovered, I believe, in South Africa. And so now people are in a panic about new lockdowns, new mandates, etc., etc. And so again, that's why we're seeing a huge explosion of fear and uncertainty into the market right now. And this is also the exact kind of thing that I hope for as an option seller, because as implied volatility expands across the market, as fear spikes across traders and investors, that means option prices are going to go up as well. So I'm definitely going to take advantage of this by putting on a few new trades today. And also I put on some more positions earlier this week if you come back to the monitor tab. So in this video, you're also going to see the new trades I put on in Alibaba, Beyond Meat, AMD, and also CPE, which is Callon Petroleum. So definitely a lot to unpack and show you in this video here. But as always, before I do so, in case you are brand new to the channel, I just want to let you know that you can also find me on Skillshare as well, where you can take my very in-depth classes on options trading or stock market investing. And I provided some links to some of the introductory courses of mine in the description of this video below. So be sure to check them out. And when you sign up for Skillshare using any of those links, you'll get a full 1-month free trial. And so with that being said, I'm going to stop here now and play a few clips that I recorded from this past week that will show you a few of the new trades I put on. And we're going to get things started with AMD. Okay, today is Monday, November 22nd, and the first stock I'm going to be trading this morning is going to be AMD. I currently do have a position on this stock right now, so if we go to the trade tab real quick, you can see I'm short both the 140 strike call option, which unfortunately is super far in the money, but as you'll see in a second, this position is still profitable. And then also alongside that, I'm also short the 130 strike put option. So basically a very narrow short strangle. But like I said, this position is still looking pretty good because once my call strike got breached for the last time, I did also buy 100 shares of AMD stock. And therefore, I converted this initially naked call option into a covered call option. And so to give you a more clear picture of how all this is working, we'll come to the monitor tab, and right here's my AMD position. So right there is the 140 strike call option, and over here in this column, the P&L open. As you can see, I've lost almost $2,000 just on that one call option. But as you can see over here with the first row, I'm also long 100 shares of the stock. And now coming back over to the P&L open column, on the long shares, I've made back about $1,900. So pretty much all the losses on the call option have been canceled out. And then of course, because AMD is continuing to move higher, I've made over $300 on the short put option. And so now what I would like to do here is I'm going to go ahead and take this position off the whole thing and book some profits. And then I'm going to basically reset and sell a new short call option above the current stock price, which is extremely sky high. So I do think AMD stock, for example, will come to the charts real quick here. And let me zoom back in. So this is exactly what I'm talking about. AMD has pretty much just been going up almost every single day for the past month and a half or so. And I definitely think it's time to see a short-term correction. So again, I'm going to book my profits, what profits I do have so far on my current position. And then I'm going to sell a new call option above the current stock price of AMD. And so with that being said, we'll come back to the monitor tab one last time. Right here is my AMD order to buy back both of those contracts. I'm going to go ahead and right click and go to cancel and replace so I can change my limit price. So right now the mark price of buying back this short strangle is $2,324-ish bucks. And now because my short call option is so far in the money, as you can see here, the bid and ask spread is a little bit wide, about 30 cents, nothing too great, but And now it just moved to 50 cents. So point being is I may have to come up a bit more in my price to get out of this position. So for this trade here, I'll come up to maybe 23.20, see what happens here. Go to confirm and send. And no fills yet, so we'll come back to the monitor tab and perhaps try to replace this order. Again, as you can see, my limit price is 23.20, but the mark price is only 23.08. And actually, never mind. Just got filled at 23.12. Not bad. Okay, so that's done. And then last up is to sell the 100 shares I'm still long. So we'll come back here, sell 100 shares, and go to confirm and send. And there we go, just got filled at 161.39. All done. Great, and so now very quickly here, let's come back to the monitor tab and figure out the final P&L, the final outcome of that trade. And so initially, when I first put on the trade in AMD, I sold the 140 strike call option and also the 110 strike put option. So that means, yes, I have made some adjustments on this trade since first putting it on. But initially, I sold those two options for a total credit of $558. And then not too long after putting on that position, AMD was continuing to push higher. And it did bounce through my 140 strike call option a few times. Specifically, it bounced through the strike of this call option. And every time I have a short call option that gets breached, I'm going to buy the full amount of shares. But if the stock reverses and falls back down below my strike, I'll get rid of those shares. I'll sell them for a very small loss, usually around 20 to 30 bucks or so. So that means if AMD unfortunately bounces through my call strike many times, then of course, every time that happens, I'm going to lose 20 to 30 bucks. And those small losses can definitely start to add up over time. And for this trade, those losses amounted to $241. So I subtract 241, and that still leaves me with a remaining credit of 317 bucks. Now also because of those losses, I did make some adjustments to this trade as I was mentioning, and that's why I moved up my put option from the 110 strike to the 130 strike. And in doing so, I took in additional credit. And that additional credit amounted to $302. So we add 302 and boom, that brings my total credit back up to 619. Now, as you saw this morning, I bought back both of those contracts, the 140 strike call option and the 130 strike put, for a total debit of $2,312. So now we subtract 2312, and that brings me back down to minus $1,693. But of course, the final step here is to figure out how much money I made on the long stock position, right? So I'm going to go ahead and clear the screen here, but don't forget this number, 1693. Now, the last time that AMD breached my 140 call strike, I bought the shares once more, and the price I got filled at was $142.63 per share. So yes, unfortunately, when I bought these shares, the stock did gap over my strike one morning, and this was simply the best price I could get filled at. And then lastly, as you saw, I sold those shares at a price of $161.39. So we add 161.39, and that means I made a profit of $18.76 per share. So then we multiply this by 100 for the 100 shares, and that's an overall profit of $1,876. So ultimately, final step is to subtract the $16.93 I lost from the earlier calculations, right? And that means I still walk away with a profit of $183. Very nice. So this here is my preferred method of adjusting losing positions and turning them around potentially into full profits. So I sell options, and then if one of my strikes gets breached, I'll either buy the stock if it's a call option, or I'll short the stock if it's a put option, and in doing so, I have the ability to turn the trade around into a full profit, right? Because otherwise, if I did not buy the 100 shares of AMD, this would be a massive loser, probably well over 16 or 1800 bucks at this point. It's obviously not a huge winner either, but still, I would much rather take a small profit than a massive loss, as would anybody else, right? And then also one more thing I need to do is cancel my stock hedging orders on AMD. So these guys are always in place to either buy the stock or short the stock, depending if one of my strikes gets breached. So I'll go ahead to the working order and right click and go to cancel. And there we go. That cancels all the orders that are dependent on it. Okay, so now I can come back to the trade tab and put on my new position in AMD and basically just totally reset. And so if I look at some of these out of the money call options here, they're all trading for super high prices because, real quick, if we come to the charts and come down below and take a look at the implied volatility for AMD. So right now the implied volatility, or basically the uncertainty around AMD, is very elevated for the time being, of course, because the stock is just exploding almost every single day to the upside, which might be a bit counterintuitive if you're familiar with implied volatility, because typically when stock prices go up, implied volatility or uncertainty goes down, which also brings option prices down along with it. But basically, in any case where a stock is just moving very quickly in one direction, either to the upside or the downside, you're still very likely going to see an expansion of implied volatility, and therefore also an expansion of option prices. So that's also why I wanted to reset my trade on AMD here, take some profits, and then sell new options with much greater prices. So now if we come back to the trade tab, I think what I'm going to do here is sell the 167.5 strike call option. This one has a 40 delta, so this is going to be a pretty bearish position. That's what I'm aiming for, right? And again, because the IV for AMD is so high right now, I can still sell this call option with only 25 days left to go for a nice hefty credit of around 560-ish bucks. So with that said, I'm going to go ahead and click on the bid price here, and that brings up the sell order down below. Just going to sell one contract, again, the 167.5 strike call option, and I'm going to do so for a price. Let's see if I can get filled at around 570. Confirm and send. Buying power effect is 2,500 bucks. That's fine. So we'll go to send. And no fills yet, so we'll come back to the monitor tab and try to cancel and replace my order. Here it is. So we'll go to cancel and replace. Looks like I'll have to come down maybe 10 bucks or so. So I'll come down to 560. Confirm and send, and we'll see what happens here. And there we go, just got filled at 565. Got price improved a little bit. So that's awesome. And then final step, of course, is to set up my GTC buying order to take my profits, of course, if I am correct on the trade. So down here, going to buy back one contract, same strike of the call option, and I'll do so for half price as usual. So half of 565 is about 282. I'll come down to 280. And so, of course, the idea here is if AMD does reverse and go back down lower, that's what I'm aiming for. And also, if that happens, I would expect to see implied volatility contract. Again, keep in mind with AMD here, it's pretty much the opposite of what usually happens in regards to implied volatility. So hopefully if AMD falls down lower, implied volatility contracts, that means the price of this call option should fall down significantly. And if it falls down to a price of 280, this order will get triggered and I'll buy it back for a nice profit. So last step is to make this a GTC order, so it's always in place. Confirm and send, all done. Okay, today is Tuesday, November 23rd, and I got some good news this morning. My AMD trade, which I put on yesterday, this one already came off for a full profit, and then also alongside that, my CROX position, this was also a naked call. This one came off for a full profit this morning too. So very briefly, if we go to the charts real quick here, I already have AMD pulled up. Let's zoom in a little bit. And so it seems for this trade, I just got lucky with picking the top for the short term, because pretty much right after I sold that naked call yesterday, AMD and pretty much the whole NASDAQ did reverse and go back down much, much lower. And then today, same kind of thing. AMD is down again by another almost 4% or so. Now also down here with the implied volatility, the IV has actually expanded a little bit, but because the directional move was so great in the past couple days, that's why I was still able to make a full profit on the trade here. So that's AMD, very, very nice. And then also I'll come to CROX real quick here. This was a trade I believe I put on maybe last week or so. And in particular, if I zoom in a little bit here, I did note this resistance level, this resistance trend line, if you will. And I sold my call option right around this point, I believe. I thought this was the beginning of another downturn. Because again, if you look at the past, every time this stock got up to and touched that resistance trend line, the stock did reverse and go back down lower. Now this time around, it definitely took a few more days for that to happen. CROX was trying to fight that trend line and really attempting to push higher, but ultimately it did fail again. So two very successful naked call positions there. And now we'll come back to AMD once again. And because the IV for this stock is still really high, in fact, the IV rank is at 66% still. IV percentile is at 88%, so why not place a new trade? Now, even though this stock has come down pretty significantly in the past 2 days, I am still definitely a bit bearish on it for the time being, but I'm not going to sell a naked call option. I'm going to do a bearish skewed strangle. I still want to have some bearish deltas, but I don't want to be overly bearish. So with that said, we'll come back to the trade tab here. And for this one, I'm looking at selling the 160 strike call option alongside the 130 strike put option. So the delta on my put here is 18, and the delta on the call is 27. So that right there, because the delta on my call is larger, that's what gives this strangle here a bearish bias. And so I'm going to right click on the call option here and go to sell and then strangle. And down below, here's the order. Going to sell just one contract, 160 strike call option, and then also at the same time sell one contract of the 130 strike put option, which is right there. And there we go. The total credit I'm going to receive for putting on this trade is about $500, and that's really nice because even with only 24 days left to go into the expiration date, I can still collect a lot of premium on this stock because the IV, as I said, is still really, really high for the time being. So I'll lock in a price of maybe exactly $500. Go to confirm and send. Buying power effect is about $1,500. That's fine. So we'll go to send. And there we go. Just got filled at 504. Got price improved a little bit. Very nice. And then, of course, the last step is to create my buying order to buy these contracts back should the prices fall by about 50%. So let me go ahead and do that real quick. Okay, here we go. There's the order. And so half price, half of 504 is about 252, but I'll come down to maybe 250. Then make it a GTC order, confirm and send, all done here. Okay, I'm back here again, still on the same day, Tuesday, November 23rd. And the next stock I'm going to trade here is going to be Alibaba, or BABA for the ticker symbol. Now this stock, if I zoom in here a little bit, has gotten absolutely killed over the past couple of days here. And if you notice right here, it looks like all this started with their big earnings announcement where the stock dropped by a huge amount just from that one day, from that one announcement. And then ever since, we've had 1, 2, 3, now 4 down days in a row. So unlike what you often see after an earnings announcement where the implied volatility usually collapses, let me look at this chart real quick here, because in this case, Alibaba has moved just so much. In just a very short period of time, the IV has actually expanded again and remained very elevated. So right now we're seeing an IV rank of 67%, very good, and an IV percentile of 96%, very, very good. Now also, if I come back to the price action chart, let me move these down a little bit here. I do think the current price at around 133, 130, somewhere in there, that's a very interesting level for Alibaba because let's change our time frame on this chart real quick. Right now, this is a 1 year, 1 day chart. Let's go to the 5 year, 1 day chart. And now I'll zoom in right around to this area. And let me adjust the scaling a bit here so it's easier to see. So right now, take a look at where Alibaba is at the moment. I know it's a bit hard to see in my chart, but as I said, Alibaba is right around $133 per share. And if you go back a few years, all the way back to around the end of 2018, Alibaba got down to right around the same exact price. And then after that point, this was the beginning of a huge bull run. Now, does that mean it has to happen again right here? Of course not. But perhaps this price level around 130 could be a very nice support level. Maybe we see a short-term bounce. Perhaps we do see the next big bull run with this company. But point being here, because of what I'm seeing on the chart, I do feel pretty comfortable stepping in and selling some put options. So we'll zoom back in here. And here we go. So I'm thinking of selling some puts with a strike of exactly 130 or so. And if we come to the trade tab real quick, we'll take a look at the actual prices for these options. So there we go. We can see the 130 strike put options are trading for about 520-ish bucks. That's really nice. I was also considering selling the 125 strike put options, but the price of these guys is only about 370 bucks or so, which for me is not quite enough because this stock is still kind of expensive at around 130 bucks per share, right? So the more expensive the stock is, the more and more credit I do want to collect for each trade I'm making. And for a stock trading over 100 bucks per share, I usually try and collect at least 400 bucks on any options I'm selling. And so again, that's why I'm going to go ahead and sell the 130 strike put option. This one does have a 39 delta too, so it is going to be a pretty bullish position, but based on what I showed you with the charts, I'm definitely okay with that. So now I'll go ahead and click on the bid price here, and that brings up the sell order down below. Just going to sell one contract, 130 strike put option, and I'll try to do so around 530 bucks. Let's see if I can get filled at that price. Go to confirm and send. Buying power effect is 2,300 bucks. That's fine. So we'll go to send. And no fills yet on this order, so we'll come back to the monitor tab and perhaps cancel and replace it. Right there is my order. Limit price is at 530, but the mark price has dropped a bit to 527, so I will go ahead and cancel and replace. I'll come down to maybe 525, see what happens here. And there we go, just got filled at 525. Very nice. And then last step here, you know the drill. I'm going to go ahead and set up my buying order to buy this contract back. And there we go. Here is the order. Going to buy back just the one contract, and I'll do so for half price. So half of 525 is about 260 bucks or so. And then we'll make this a GTC order, confirm and send, all done here with Alibaba. And then of course, should this stock continue to push down lower, Specifically, if it breaches my put strike here, what I will do is step in and short 100 shares of the stock. And in that way, if Alibaba just continues to go lower and lower and lower, doesn't matter. My put option will be totally covered by those short shares, and I'll still get to walk away by the expiration date and keep the full premium. But of course, hopefully that is not necessary. Okay, welcome back. I hope you enjoyed those few clips there. And also, as I mentioned earlier in this video, I did also put on some new positions in Beyond Meat as well as CPE, but I was not able to record them, and I'll go over those new trades in a moment. And as you can see with CPE right here, I did already have to make an adjustment this morning. But first, I do want to go ahead and put on at least one or more new trades. So we'll come to the charts real quick here, and we'll go to NUE. This is Nucor Corporation. I have traded this one a couple times in the past. This company is basically involved in the production of steel and steel products. And as you can see down here with the implied volatility chart, the IV for this stock has exploded this morning all the way up to about 55%, which for this stock is on the extreme upper bound. So this current level of implied volatility corresponds to an IV rank of 96%, that's extremely high, and also an IV percentile of 100%. So again, basically the current level of implied volatility for NUE, with the exception of maybe this day right here, the current level is the highest it's been over the past 1 full year. So therefore, if we come to the trade tab now, I do expect the options on NUE to have very nice inflated prices. And as you can see here, I've already gone ahead and picked out my strikes. For this trade here, I'm going to sell a slightly bullish skewed strangle. So therefore, on the put side, I'm going to sell the 107 strike put option with a 33 delta. And then on the call side, I'm going to sell the 125 strike call option. And this one here has a 23 delta, a bit less. So again, that's what makes the strangle here slightly bullish. And the reason why I'm bullish, if we come back to the charts real quick here one more time, let me zoom in. Number one, this stock is down a bit today, currently by about 2.3% or so. And then also, I do think this uptrend, which you can see right here, I do think this is going to continue for the foreseeable future. So that's why I don't mind my put strike being a little bit close to the current stock price, around 107, right? But I do want to give the call option a lot more room to breathe. And so that's why I'm going to go with the 125 strike call option. Great, so that looks good. And we'll come back to the trade tab now and make this trade official. So I'll go ahead and right click on the call option, go to sell, and then strangle. Down here is the order, sell one contract, 125 strike call option. Also sell one contract of the 107 strike put option. And also for this trade, I'm still in the December expiration cycle with 21 days left to go. Not too much time, and yet I can still sell these options for about $500 in premium. And of course, that's because the implied volatility for NUE has expanded this morning. So we'll go ahead and lock in a price of maybe exactly $500. Go to confirm and send. Buying power effect is $1,600. That's totally fine. So we'll go to send. And no fills yet on this order, so we'll come back to the monitor tab real quick here and perhaps adjust my price. Down there's my order. And as you can see, my limit price is, of course, $500. The mark price, though, is $505, but I'm still not filled. Perhaps because, again, there is not a lot of liquidity today, meaning there's not a lot of people trading in the market at the moment. So we'll go ahead and cancel and replace and come down a few more pennies, maybe down to $4.95. See what happens here. And there we go, just got filled at $4.95. Very nice. And then, of course, last step is to create my buying order right to buy these contracts back. So I'll go ahead and do that very quickly here. Okay, here we go. This is the order. And then, of course, my limit price is going to be half of where I got filled at. So half of $4.95 is about $2.47. I'll come down to $2.45. Make it a GTC order. Confirm and send, all done there. Okay, and then next up here, we'll come back to the charts and go to Roku now. This is also a stock I do want to trade this morning. Let me move this down a bit here. So I definitely have been keeping a close eye on the stock here. I'll zoom in a bit. I definitely think Roku here is overdue for a short-term correction, specifically a short-term bounce, because over the past month or so, this stock has done nothing but just go down almost every single day. So also if you come to the RSI indicator, this one tells you how overbought or how oversold the stock might be. And typically once this indicator gets below a value of 30, that's a sign that this stock is grossly oversold. So right now, the indicator is at a value of 24. And then finally down below with the implied volatility chart, also seeing a pretty nice spike of implied volatility, partially from today, as you can see here. And then also just over the past couple weeks, it looks like there has been a gradual buildup of implied volatility too. So right now the IV rank is at 41%, pretty good. and the IV percentile is at 49%. Not bad, not amazing either, but still the premium on the options for Roku is still really, really high. So specifically, if we come to the trade tab now, for this stock, I'm just going to sell a naked put option because I'm very bullish on it for the short term. Still going to be in the December expiration cycle for this trade too, 21 days left to go. And for this one, I'm probably going to sell the 222.5 strike put option. Kind of a weird strike, but I do like the premium on this option a lot. I could sell this one put option for almost $900. And the delta for this put option is 37. So again, pretty bullish, but that's where I want to be. And also because the premium for this option is so high, and with only 3 weeks left to go, the time decay on this contract is also going to be very, very high. So if you look at the theta column for this contract, right, the value of theta for this option will tell you how much the price of this contract will decay every single day. And right now it has a value of almost 30. So all else being equal, if Roku were to kind of just trade sideways and implied volatility for the stock were to not move a whole lot, the price of this option would drop by about $30 every single day. Now, of course, even though time decay is always working behind the scenes, the stock can definitely move. It can drop much lower, and that would offset any time decay for sure. Implied volatility also could expand, but point being, because time decay is always on your side as an option seller, then I definitely like the fact that the time decay for these contracts is really, really high. So with that said, we'll go ahead and click on the bid price for this option here. Down below is the order. Just going to sell one contract because, of course, this stock is pretty expensive. And for my price, we'll see if I can get filled at around, let's try exactly $900 here. Go to confirm and send. Buying power effect is almost $4,000. That's a bit high, but of course, again, Roku is a pricey stock at about $230 per share, so $4,000 is to be expected. So therefore, we'll go to send and we'll see what happens here. And there we go, just got filled at exactly $900. Awesome. Great, so last step, I'll go ahead and very quickly set up my buying order to buy this contract back if I am indeed correct. So here we go, buy one contract, same strike put option, and I'll do so for half price. Half of 900 is 450. Make a GTC order, confirm and send, all done. Great, so at this point, my portfolio here should be fully allocated. And in fact, let me go ahead and move my new Roku position to the right category now. So I'll move it to the naked put section. There we go. So now at this point, I have on 3 naked put positions and 4 short strangles. Now, lastly, in this video, I do also want to briefly go over my new positions in Beyond Meat and also CPE. These were the ones I was not able to record. So as you can see with Beyond Meat first here, I believe it was Wednesday when I put these positions on. And so I sold 2 contracts of this 72 strike put option. And this trade was basically very similar. If we come to the charts real quick here, we'll go to BYND. Very similar to my Roku trade. So if I adjust these charts a bit and I'll zoom in, as you can see, this stock as well has gone down pretty much every single day in a row. And I felt it was time for a short-term bounce. And so far, that's exactly what's been happening here. We've had 2 nice up days in a row. And right now, if we come back to the monitor tab, on this trade, I'm up so far by about $77. So that's Beyond Meat. And then also in CPE, again, this is Callon Petroleum Company. They're involved in the production of oil and gas in Texas. And for this trade, as you can see, I sold 1 contract each of the 55 strike put option and also the 75 strike call option. So at the time, and even more so today, we'll come to the charts briefly here, CPE, and I'll zoom in. So this was also intended to be a bullish skewed short strangle, but unfortunately, as of this morning, this stock had a huge gap down from yesterday's close. So it basically fell from a high of around $61 per share down to an opening price of around $55 per share, pretty much right on my short put strike. And then this morning, it has simply continued to trade lower and lower and lower, now at around $50 per share. So this stock is down by about 18% at the moment. And as I briefly showed you at the beginning of this video, I did go ahead and make an adjustment on my CPE position by shorting 100 shares of the stock. And I did this right at the opening of this morning's market because, like I said, the opening price for this stock was pretty much right on my put strike at $55 per share. So as you can see, the price I got filled at for this order was $54.67, which is totally fine. I would like to have gotten filled a bit higher, ideally around $54 and maybe 90 cents or 80 cents, but I can't complain too much. And because I made that adjustment, if we come back down here to my actual trade, if you focus on the 55 strike put option and go to the P&L open column right here, on this put option, I'm down by over $545. But then right above it, as you can see with the 100 short shares of this stock, on that part of the position, I've made $455. So that cancels out a huge portion of the losses on my put option. And then finally, with the 75 strike call option, this one has actually made money too because, of course, CPE has moved away from this option, and right now I'm up on the call by about $100. So therefore, when you add it all up on this whole position, I am only down by $4.50 at the moment. And otherwise, without those short shares, I would be down by probably around $400. And so there you have it, a very short but still very busy week, and I'm definitely looking forward to next week, and we'll see what happens with this current fear around the new coronavirus strain. Perhaps the market could just shake it all off next week and we could see a nice rebound across the board, or we could see a continuation and stocks moving down lower. So with that being said, that's going to conclude this video. I hope you enjoyed it, and please let me know your thoughts or if you have questions in the comment section below. And don't forget, if you want to take some very in-depth classes on options trading or stock market investing, then check out my Skillshare courses. Links in the description of this video. And finally, if you enjoyed this video, then please give it a thumbs up, drop a comment, and subscribe to my YouTube channel. I drop new videos every single week, and you don't want to miss out. So thanks again for watching, and I'll see you next time.